maybe some of you already know this, but if you don't, there are, in a normal work year that is 40 hours a week, 52 weeks in a year, there are 2,080 hours in a year. So some of those calculations that we did, we can kind of take a shortcut and use the 2,080. Like we annualized the salary and then we took it by week and then we divided it by 40 hours. This kind of jumps over a little bit of that if you don't want to go through all of those calculations. And I would suggest though that you go through them until you're comfortable understanding exactly how to calculate the hourly rate. But just kind of as an FYI, no additional charge, 2,080 hours in a typical work year, work hours. As many of you probably know who have worked, oftentimes it ends up being more than 2,080 hours, especially if you're going into the accounting field. You can probably expect that it's going to be more, on average, going to be more than 2,080. But 40 hours a week, 52 weeks a year, comes up to 2,080 hours. So just a little life hack there for you. Let's see. We converted those wage rates to hourly rates, and that's where, like I said, you can kind of, if it's a 40-hour week. Now, if it's not a 40-hour week, or it's not 52 weeks, you can't use that number, right? But if it's 40 hours, 52 weeks, you could kind of skip over some of these initial steps there and jump right to it. Where did we leave off? We went through a lot of examples.
I think we're starting with piecework.
Right, thank you. Piece rate. All right, so we talked about that there are two different, did I go through these calculations at all? I did. We went through there's a couple of examples here to show you, but I know that I rushed through it a bit. So let's back up and go through this a little bit again. So there are a couple of different ways that piece rate pay is calculated. And remember, piece rate pay for those individuals who are not exempt from the FLSA, they still have to meet those minimum wage requirements, right? So first way of doing it, again, is basing it on, so we got our units produced times the unit piece rate. And again, this might be items inspected or assembled, that sort of thing. And then we get so this is our regular earnings, and then we would take our regular earnings divided by the number of hours that they took to produce that number of items to get what our hourly rate is. And then that's the hourly rate that we would use to determine our overtime rate. So it's based on the number of hours that were worked. Then we've got this other method, and this is just the same. You add then the regular earnings plus the overtime to get what our total gross pay is. Next, method B is actually using the piece rate payment, the amount that's paid per piece, and multiplying that by 1.5. Now again, we still have to make sure that we're meeting those minimum wage requirements on an hourly basis, but the overtime could be calculated in that method instead. So in looking at these examples, and I know we went through this, but we'll go through it one more time just to refresh your memory. So this is in method A and method B, we do get two different gross pay methods. And again, there would have to be an agreement and an understanding that the employee knows how that is going to be calculated, right? And the employer can't just kind of willy-nilly choose each time which is going to be most beneficial to them. Method A, so we got 4,812 units inspected, 47.25 hours per week, so we've got 7.25 hours of overtime. 600 were produced in extra hours. Again, that part doesn't matter to us when we're using the first method, right? Those 600 hours, that's going to come into play down here with method B. 12 cents per unit. In calculating using method A, all we're going to do is 4,812, the total number of units produced times the piece rate. to get our regular earnings, and then we're gonna divide that amount by the total number of hours worked. So this is telling us, you know, on average, this is how much he made on an hourly basis. Now, obviously, some hours he probably produced more units, some hours he probably produced less. Did you have a question?
Well, I was gonna ask, why are we dividing by the 47.25 instead of like
To get the-
40?
Yeah, to get the average,
Okay.
average hourly rate. Now, obviously, if that number came out to less than our minimum wage requirement, then we would have to make up the difference on that, right? But in this case, it doesn't. He's cool. $12.22 per hour. But we are going to divide it by the total number of hours. Then to get that hourly rate, and then we're going to multiply that by the 0.5 to get our overtime premium, so the amount over and above, right? And then we're going to multiply that by the number of overtime hours, where are we here? Add these two together to get our gross pay. But again, it doesn't matter how many units were actually produced during those 7.25 hours. That's going to come into play in the second method here. So when we're doing the method B, where it's based upon the number of units produced in overtime, then we have to keep track of how many units were produced during overtime. So that would increase the record keeping requirements there. That might be kind of administratively, that would be more difficult than using the first method. So to get our regular pay, we just take the number of units that were produced in regular time, and we get that just by taking the total minus the number that were produced in overtime. That gives us what was produced in regular time, times our regular piece rate per unit amount. Then we're going to take the number that were produced in overtime. We're going to multiply that per unit rate times 1.5. Rather than the hourly rate up here, we're actually multiplying the per unit, the piece rate, by 1.5. And then multiplying that by the 600 hours, the number of 600 units that were produced, and then adding those two together. Okay, and you can see, at least in this example, that the first method is more generous to the employee than the second method. But you could also see how maybe an employee could game the system by maybe producing more when they're actually working in overtime, right? Because if this number here instead was 800 units, that's going to increase what our total gross pay is in that circumstance. Not to say that one is better than the other. It's going to be up to the employer and the employee to come to that agreement. Or at least the employer has to make it clear how that is calculated to the employee. Any other questions? That was a good question by the person. Thank you. Does that make sense? Okay. And I think we went through, so this was some other, maybe we didn't get this one because we didn't talk about shellfish. So Voisin, they got some interesting names that I haven't heard of before. Royson is paid to inspect shellfish, is paid 8 cents per case and inspected 6,897 cases during 43.5 hours. 423 of those cases was produced in overtime. Calculate the gross pay using both methods. So I know it's written up here, but I'm gonna go through it anyway. Like I said, sometimes it's easier to do that. A little easier to follow if you actually see it, the process happening. So 8 cents per case, inspected 6,897 cases. So method A, 6,897 times 8 cents. Calculate that. They need to keep the calculator up here. So 68.97 times 0.08. So 551.76. This is our regular pay. They worked 43 and a half hours. So now we're gonna take that 551.76 divided by the 43.5. $12.68 an hour. And then we're going to calculate the overtime premium. So the full, if you think about these 3.5 hours, they're going to be paid at 1.5, but we've already included the 1 in this calculation. Now we just have to add the half. So the overtime premium, $12.68. Again, we're going to put this down here. Times 0.5. So $6.34 for our overtime premium. Now we worked 3.5 hours of overtime. So we're going to take this 551.76, start with our regular hours, plus 3.5 hours times 634 to get our total pay. So 22, what did they round it to? I don't know what they rounded it to. That's 5. 22.19. So this comes up to 22.19 here. Add those two together. 573. Whoops, did I get it? Yeah, 573.95. Their total. There. Using that method A. So again, we don't really care how many were inspected during overtime when we're using that particular method. Method B. Now we're going to have to figure out how many units were produced during those first 40 hours, and then how many were produced or inspected, whatever I think it's inspected here. How many were inspected during overtime? So we need to subtract the cases inspected in overtime from the cases inspected during the total number of cases. So 6897 minus, what was it, 423? So 6474 were inspected in regular time. So in those 40 hours. And then the additional 423 were inspected in overtime. So the 6474 is going to be calculated, or is going to be at the regular rate, 0.08, right? Plus that 423 is going to be at the regular rate times 1.5. 0.08 times 1.5. I'm not a mathematician. I don't remember how the brackets and the parentheses work and all that stuff. But I do know how to do the math on this. So 6474 times 0.08, so that's 517.92. That's our regular time. And then 423 times 0.08 times 1.5, 5076. If I've done it right, it should have equal what we've got there. 5076 plus 2, 568.68. Okay. Questions about that? But again, remember, we've got to make sure that we're at least paid the minimum wage. Now we know, 40 hours times $7.25 an hour is $290. 3.5 hours of overtime would be like 30 some bucks, so we're well over the minimum wage here. Yeah.
What would be some key indicators to like which method we're supposed to use?
You know, that would be probably, well, they'll tell you.
Okay.
The problem should tell you
Okay.
which one to use. Yeah, you don't have to decide
Okay.
like which method to use when doing that calculation. Okay. All right. Okay, so I kind of glossed over this a little bit too. So there are some special incentive plans. Usually, these are things like sales commissions, or we've got a tiered structure for payment of work, and it's to encourage workers to produce more. So if they get, if they produce more units, then they're going to get paid at a higher rate for those additional units. Example of one of those here, 18 cents a unit for units inspected up to 2,000 a week, and then we've got the second tier, which would be paid at 24 cents if it's between 2001 and 3,500. Third tier would be 36 cents per unit for number of units over 3,500 per week. Now, again, administratively, that would be difficult unless you've got some sort of automated system to help with determining, how many units exactly were produced by which workers. So it would be dependent upon industry, whether or not such a tiered system would work. Again, if you can automate that, all the better. Commissions. We usually think of commissions as amounts that are over and above a set salary or even a set hourly rate. So, and again, this is to entice individuals to either increase their sales, if it's based on sales, increase their production. Maybe it could be based on production. It could be based on any number of factors. Whatever the company decides is going to encourage workers to do a more efficient work. In this case, what we have is somebody who is on a salary. So the base salary of $30,000 per year, which we would have to determine first what are our regular wages for that pay period, using the same method that we used prior, annualizing that salary and then determining per pay how much they're making. And then on top of that, he has the ability to earn commissions. So over and above that $30,000. So if he sells more than $31,500, he's going to get 2% of the amount of sales that are over that amount. So we've got a couple of calculations that we have to do here. We've got to figure out what his base salary is on a per pay basis. If he's paid bi-weekly, we're going to divide that annual by 26 pays to get his base earnings. And the second calculation that we have to do is to determine then 2% of that amount over $31,500. So that $8,500 times 2%, he gets a $170 commission on top of that, and then add the two together. So again, two separate calculations for those. Commission structures can be quite complicated. They can be very complex, which can be good, but there are some downsides to that complexity as well. You need to have a commission structure that is easily understandable by the employee. They need to be able to know exactly what they need to do to get to those different levels, right? If unfortunately, some commission structures that I've seen, they're so complex that, even where one of the CPA firms that I worked in, I didn't understand the commission structure. We were paid for, we could get bonuses based on bringing new clients in and then working on those clients, but there were also other parts that had to do with the overall activity within the firm, and it was so complex that even the CPAs in the firm were scratching their heads over it. And so it needs to be, and that caused a lot of problems. Eventually they did away with it because it was too complex. So it does need to be easily understandable by the employees so that they know exactly what they need to do. So non-discretionary bonuses. So these are bonuses that are part of the employee's wage rates. They have to be included for the period that are covered by the bonus. So these are bonuses that are known in advance. They've got down here an example of a safety performance bonus. So Jamil understands what he needs to do in order to get that safety performance bonus. So they're known in advance, set up as incentives that are added to the wages for the week. They're then divided by, and this is how we would calculate then overtime. We can include these amounts in the overtime calculation. Divide the total hours worked to get what our regular pay is. And then the overtime is going to be calculated based on that rate. So let's look real quick at this calculation that they have here. We've got Jamil earns $13.50 an hour. He's got a safety performance bonus of $85. Okay, he worked 44 hours during the week. That means he worked 4 hours of overtime. So this 85 is actually going to be included then in our calculation of what that overtime rate is, because it's a discretionary bonus. We calculate that by again, we're going to use the overtime premium here. So $13.50 times 44 hours, total hours, $594 plus the $85 to get a total rate of $679. Divide that by 44 hours. His regular rate during this pay period is $15.43. Now, next pay period when he doesn't earn that bonus, his overtime rate is going to be less, right? Because that 85 is not going to be included in the calculation. So we take the 1543 times 0.5 for our overtime premium. Overtime premium $772 per hour times 4 hours of overtime, $30.88. So his total pay then will be the $679 plus the $30.88. Okay. Again, if he didn't have that $85, we would simply be taking the $594 times 0.5, which means this overtime rate is going to be lower. So because he got that, and that is just for the non-discretionary, I said discretionary before, I misspoke, the non-discretionary bonuses. Discretionary bonuses are not included in that calculation. Discretionary would be, hey, you did a great job, surprise, here's $100. You don't know what you have to do in order to get that. In this case, it's non-discretionary. You know exactly what you need to do. Profit sharing plans. So won't really go into profit sharing plans too much, but this is just another incentive type of plan where employees, they're not necessarily, owners of companies always will receive a share of the profits, provided the company is profitable. In this case, profit sharing plans, the employees aren't owners, but they are sharing in the profits of the company. And they could be given in multiple ways. Cash payments, so you just get a bonus in your, you get a payment in your, not a bonus, but a payment in with your regular paycheck. It could be that those profits are paid into a retirement account, so you don't get it right now, but it then goes toward your retirement. Or they could be distributed as stock if the company owns stock. So instead of, $100 profit sharing check, if the stock is trading at $50 a share, maybe you get 2 shares of that stock. Now, the advantage of that is it supposedly will encourage people to work harder because they want to increase the value of that stock, right? And it does give them if you're just giving somebody $100, it's $100 and it's gone, right? I mean, they could invest it, they could choose to use it toward long-term goals, but if it's stock, it's going to ideally increase in value on its due to market forces. And of course, the more employees work toward increasing the value of that stock, the more efficient the company becomes, the more money everybody, ideally, in an ideal world, everybody makes. So, let's see here. So just kind of in summary what we talked about, We talked about those major provisions of the Fair Labor Standards Act, remember, so overtime, minimum wage, child labor, and record keeping requirements. Those are the four major provisions. We talked about how to define hours worked, what's included in work hours, what isn't. Things like on-call time and sleep time and all of that stuff that we discussed. The main types, I kind of glossed over the main types of records, but we just talked about time cards, those time sheets. In chapter 1, we discussed the payroll register and the employee earnings report. Did a lot of calculations for regular and overtime pay, including talking about how we pay individuals who are tipped. And then we also talked about different types of compensation plans. This is by no means, those compensation plans that we just discussed are by no means exclusive. There are other types of compensation plans as well, but these are the most popular types of compensation plans that are out there. Okay. Any questions before we move on to talking about some homework?